What's up, everyone? It's Cowdy with MoneyVest Real Estate. So it's finally time for me to break down the entire deal and of course give you guys the details, the tempting sort of numbers and everything, the whole process, and go over everything for my first investment property here in Dubai. I'm going to be breaking down everything you need to know. I'll go over the 17, 18 steps in the entire process. So it's going to be a nice step-by-step guide on how you can go about buying a property here in Dubai and what due diligence you need to do. A whole checklist of documents I'll be sharing, not in this video, but in our future updates and videos, and also in a more written format with everybody in the community. So you have a much better idea and understanding of course, buying and investing in real estate here in Dubai. So hope you all enjoy this video and find it helpful. Make sure that you subscribe to the channel and drop a like. I would really appreciate that. We're trying to grow this channel, MoneyVest Real Estate, to 1,000 subscribers by the end of this month. So again, you can expect a lot of content related to real estate over in the Middle East and in India and over in the US as well. And we're going to be sharing a lot of our analysis and research over time so that we can all really learn from each other. And of course, grow really well. So first things first, let me go over the exact location that I bought the property in, and that is going to be in Jumeirah Village Circle. So it's in JVC in Dubai. So a lot of you may have heard of course, the Burj Khalifa and the downtown area, which is going to be all the way over here. So that's in Business Bay. As you can see that right over here, that's Business Bay. This is where the Burj Khalifa is, right around here. This is where the fountain and the Dubai Mall is. You can see Dubai Mall right over there. And if you kind of zoom out a little bit, and come down all the way here, this is where Jumeirah Village Circle is. It's another really developed community, and the reason why I picked this area in particular is for multiple different reasons. My idea of investing in real estate from the beginning was to generate some passive income, some rental income, and at the same time to find a property that's going to appreciate over time. Now, I understand that there's going to be a few people that are familiar with the Dubai real estate market might kind of, look down on Jumeirah Village Circle because they feel there's a lot of supply coming into the market. So if you come over to DXB Interact, and this is a tool that I like to use to do analysis and overview on the real estate market here in Dubai. And if you come over to just basically the supply section, you'll notice that there are currently 703 projects that are under construction with over 220,000 units that are being developed. And if you come over to the area, so if this is broken down by area, let's just come down. A lot of them are actually being delivered. There you go. So future property supply in Dubai per area. JVC is at the very top. So Jumeirah Village Circle, you'll notice 21,000 units being developed. So there is going to be an increased supply over time. And that's exactly why I mentioned that developer quality is so very important, because not all 21,000 units here that are being developed are high quality. A lot of them are going to be built by unknown, non-recognized developers that may or may not hold up their value over time, because again, like I said, developer quality, very important. In my previous sort of deal, I was looking at Arjan. So Arjan is another area which is right next to JVC. So Arjan is right over here, which is literally right next to JVC. I was looking at that area as well. Found a really good deal with very nice cash flow and rental yields. But at the same time, I wasn't sure if that property was going to appreciate over the next 5, maybe 10 years. Because number one, there's a lot of supply hitting the markets. Number two, developer quality was unknown. So for that reason, I wanted to stick with a select few developers here in the UAE. I'll go over that in just a minute. But like I said, there is a lot of supply in Jumeirah Village Circle. So a lot of people, I understand why they might be like, why JVC? And there's a lot of supply coming in for a couple different reasons. Number one, the developer quality. Number two, the rental yields are actually pretty solid here in JVC. People are willing to pay pretty good rents here because it's not like a luxurious sort of community. Luxury would be, of course, the Palm Jumeirahs, of course, over here, the Leaf, as I'm sure you've heard. Downtown and Business Bay is also very expensive because this is where most of the commercial offices and everything that high skyscrapers and the buildings are. And then another really up and coming area, there's two of them, which is where I wanted to originally buy. But I'm kind of priced out of that market because I'm a cash buyer. I'm not a finance or a mortgage buyer. And because I'm a cash buyer, these are very expensive markets. The first one's going to be in Dubai Hills Estate. So Dubai Hills Estate is going to be over here. This is where the Dubai Mall's Hills Dubai Hills Mall is, and also very close proximity to major highways. There's no plans for future metro stations, but this is a very up-and-coming community built by one of the top developers, which is Emaar. So this is where I originally wanted to be, and this is where my next deal, hopefully, inshallah, everything goes well, this is where it's going to be on the next deal. But Dubai Hills Estate, and the second one is going to be Dubai Creek Harbor. I was just there yesterday, and absolutely phenomenal development also by Emaar. So Emaar is one of the top developers in Dubai. They've built Burj Khalifa, they've built Dubai Mall, they've built Dubai Hills Mall, they've built also lots of schools, lots of amazing buildings, a very, very high quality and very simplistic design as well. So Emaar is number one, Dubai Hills Estate, Dubai Creek Harbor, Downtown Business Bay. Those are some prime locations to buy real estate, in my opinion, for both capital appreciation and also rental yields. JVC comes at a close second, which is not luxury, but if you're able to find some good deals, that's also worth looking into. So the property that I purchased for this first deal is from a developer called Ellington Properties. Ellington Properties is also very, very solid, and the name of the apartment unit is Hamilton House, and the price that I paid for this was 895,000 dirhams. Okay, so 895,000 dirhams. I'll go over the numbers here in just a minute. So 895 is roughly around 243,000 US dollars. And this right here is a true value, sort of, you know how we do similar valuation analysis on stocks? This is Bayut.com. And they also do like a very similar true value estimate of the property values. And you'll notice that for 1 bed, 2 bath, that's exactly the specs of my property. So I bought a 1 bedroom, 2 bathroom, 797, almost 800 square feet in Hamilton House in JVC. Paid 895 for it. And the value that right now, the fair value for what it's selling for in the marketplace is somewhere between 960 and over 1.1 million. There are also properties listed for 1.1, 1.2, 1.2. So I was at the Ellington office the other day, the developer's office, and they said that 895 was absolutely killer deal. And as it gets closer to handover, another thing I want to mention is that this is off plan, meaning that it's not constructed yet. However, it is 50% of its way there. To be precise, 42%. So this right here is the Hamilton House. You can actually check on the government website of how much the project is complete. And right now we're at 42.28%, but this was last updated a couple of weeks ago. As you can see that this was March 20th was the last inspection, and the current progress is just almost half of the project is complete, and the delivery date or the handover is in March of 25. So there's going to be about 6, 7 months, 8 months left for this project to be completely fully finished. I'm still taking into account a grace period because developers here have the opportunity to delay the project up to 1 year without incurring any penalties and fees. So I'm not expecting handover at least a year from now. So beyond March of 25, I'm kind of taking that into account. But as they get closer and closer to handover, property prices appreciate because it's a finished product. And of course, the end user, which is users that want to take a mortgage and buy properties and move in, families, individuals, couples, whatever the case might be, they're willing to pay the higher prices. They're willing to pay the premiums as the projects are now developed. So $895, I felt like it was a really, really good deal. On a price per square footage basis, I paid close to 1,100 dirhams per square feet, which again, on average, on a median basis in JVC was actually really low for a developer like Ellington. Again, if you ask anybody in the UAE, Ellington is one of the top developers with very high finishing, very high quality products across multiple different areas. So they're building in Dubai Hills Estate, they're building in JVC, they're building in Arjan, they're building in Palm Jumeirah as well. So a lot of places that they're in. And again, I was very happy with the pricing that I got. This was a distressed sale at the end of the day, so I was able to negotiate a little bit, but it was already priced pretty low to begin with. So these right here are the numbers that I ran. So purchase price 895,000, and I ended up paying about 76,000 dirhams roughly in closing cost, which again is a lot. It's a little bit over $20,000 in closing cost, which includes, of course, the DLD fee, which is the 4% government fee that you pay, plus the 40 dirham ukud. So that came out to 35,840. Agency fee, which is 2% commission plus 5% VAT, came out to just under 18,800 dirhams. Then you've got a trustee fee. So trustee fee is the registrar office where you go and you essentially do the transfer. So you have to pay them 5,000 2,250 dirhams, and then the conveyancing fee, which is part of the agency that you are buying from, so the brokerage, they kind of allocate a conveyancing team that goes over all the paperwork, that does all the documentation, and because this was my first deal, I wanted to have my own attorney, my own lawyer present, so there was another 8,400 dirham fee that I paid to the lawyer, which again, a lot of people don't really need that. It's because it was my first deal. I needed to have that confidence. I needed to have that comfort that my documents are getting reviewed properly, and we're doing a lot of due diligence on this deal to make sure that everything goes smoothly. Property inspection, property valuation, this is not completed yet because again, the property is not even complete. So once it is handed over, then I can go for inspections and snagging and whatnot, snagging basically, and then of course see if there's any defects or any problems that I can then of course let the developer know. And furniture, since it's going to be an unfurnished place, so that of course is not included, but it's a one-time fee that you would pay to of course furnish the entire apartment. But all in all, 76,535 is the estimated closing cost, and total cash outlay was about 971,000. Now I do want to mention that I did not pay the entire 895,000, right? I haven't paid all that money yet because it's still under construction. There's specific milestones that you have to pay every time the property reaches, let's say, 50% complete or 60% complete. So every time this number moves, then the developer, which is Ellington Properties, can ask for payment. But right now, since it's only almost halfway there, I haven't paid the entire amount, right? There's a big bulk payment that's due at the end of handover. Once it's complete, that's when the major bulk payment happened, which is about 30%. But before that, it's like 5%, every so often until the project is getting completed. So I haven't paid the entire amount. I've only really paid about 616,000 dirhams right now for this property at the moment. So this right here are my expectations for when the property is ready for rentals. Not to mention that, of course, prices will be higher at close to 1.2, 1.3 million dirhams. So I can obviously sell the property if everything goes well, if the market is stable, and again, prices continue to be stable and appreciate, again, the price will increase to at least 1.2, 1.3 million. It's a stupid bug here. And gross rent, I'm expecting in the first year at around 90,000 dirhams for the entire year. This is the yearly rent. And the service charges, which is very similar to HOA, at 21 dirhams per square feet. And since it's almost 800 square feet, I'm expected to pay around 1,100. This is the price, so price per square feet. And the service charges will be over 16,700 for the entire year. And this takes care of common areas, amenities, the lifts, the elevators, gyms, pools, everything in the common areas. It's very similar to an HOA. Now, HOI, which is homeowners insurance, I'm expecting about 2,400 dirhams per year. So homeowners insurance is actually quite cheap here in Dubai, so 200 dirhams per month. Utilities, I'm expecting around 15,000. So there's a couple ways I can do this. I can rent this apartment out without paying for utilities or furniture and let it just be as is, and the tenant takes care of all the utilities and furnishes the place. So of course my rent is going to be lower, but if I furnish the place and I include utilities, I can demand for a much higher rent. On top of that, if I actually give them the option to pay me monthly as opposed to quarterly or semi-annually or yearly, because there's a concept here in Dubai where you pay the landlord rental checks, and those rental checks can be divided into 4 checks, 2 checks, 6 checks, depending on the landlord and the negotiations. But it's a very common sort of practice where you pay the landlord multiple checks over a year, whether it's 4, 6, 2, or 1. But if you offer them more flexibility, then of course you can have a higher sort of rental income. So if you offer, let's say, 12 checks, then I can even bump this up to 100,000 where there's furniture and utilities included. It's a 1-bedroom place, right? So again, that's an analysis that I can run. And this right here are my budgets that I also plan for. Basically, I'm putting money aside for future expenses, right? Whether it's capital expenditures, whether it's repairs and maintenance, whether it's property management, vacancies, whatever the case might be. But I am putting aside close to 25 to 30,000 dirhams every year in planned expenses for the future. Now, this I may not have to do after second or third year once I've got a decent sort of bucket of cash just sitting aside. I may not have to do that from year 3, year 4, year 5 because I've already got the money, kind of budgeted and already saved for it. And another thing I want to mention is that since it's a brand new property, it's literally just getting built. I don't expect to have major expenses anytime soon, especially not in the first 2 to 3 years, because again, it's a brand new project, right? So nothing really, something could still break, but the probability is quite low for something major to break down and for me to having to shell out big amounts of cash. So there's some sort of risk over there, risk management over there. So after everything is said and done, net income sitting at $28,800 for the entire year, cap rate 3.2% based on super conservative expectations here, and a net cash on cash of just under 3%. For this property, which is a monthly cash flow of about $654 and a yearly cash flow of just under $8,000 of again net cash flow on an annual basis. Now see what happens if I don't plan for any expenses or any budgets here. If I put everything down to zero because it's a brand new property and I'm not expecting to pay any repairs and maintenance and capital expenditures, then of course my net income jumps to almost 56,000 dirhams per year, which is a net cash on cash of just under 6% with a cap rate of over 6% and a monthly cash flow of $1,200 or yearly cash flow, net cash flow of just over $15,000. So again, I can play around with those planned budgets here, but this is what it ended up being with, again, the gross rent at 90,000. Maybe I can increase that a little bit as well, depending on the markets next March 2025 and what kind of rental yields there are, what kind of rents I can demand for. And I can also kind of think about a strategy between short-term rentals or long-term leases, depending on the market conditions when the property is ready for handover. So this is the type of analysis that I was able to run, and this was the entire step-by-step process that I want to walk you through. First step obviously was finding the property. So that was step number one. Once you finalize the property, then you negotiate on the price with the seller. This was already listed for a pretty attractive price. I was still able to negotiate down further and get this down to 895,000, which ended up being the final purchase price. Then step 3 is basically putting in a formal official offer, and you do that by putting down 10% of the purchase price. So I basically gave the agent a 10%, a picture, not a physical check, but a picture of the 10% check. And that is usually the booking amount, or essentially stating that my offer is serious and I'm putting it under offer, a very common practice here in Dubai. And once the seller accepts the offer, then we're just moving over to the KYC process where, I'm verifying all the seller details, the seller is verifying all the buyer details like passports and IDs and, title verification, just making sure that the seller is indeed the owner of the property and they have the right to sell it. And then step 5 is signing contracts. So very, very important step, which is signing contract A, B, and F. So basically A is the contract between the agent and the seller. Contract B is between the seller and the buyer. So those are two separate contracts. And then contract F is a combination of those two contracts. And this is very, very important. Once you've signed contract F, you can't back out of the deal. Neither the buyer nor the seller, because if you do, you will be liable for 10% of the property price, right? So you can't back out of the deal. You'll just be giving up 10% of the purchase price if you do back out after signing contract F. Step 6 was quite interesting, that because it was an off-plan project and because the developer was also involved, we had to pay 5% to reach a 60% threshold. Remember when I said that the property, 895, the purchase price, that's not fully paid. That's the purchase price. But since the property is still under development, it's still under construction, we pay in milestones. So the next 5% payment was also due to reach a 60% threshold, which is 60% of the property is paid up to obtain the NOC from the developer. NOC is no objection certificate. That is essentially stating that the seller can sell the property. There's no objections from the developer. They've got the right to sell it. There's no outstanding dues. There's no financial contingencies. There's no liabilities. There's nothing attached to the property, and they have the full right and they're clear basically of any dues to sell the property to the buyer. So this 5%, since this was a distressed sale and the seller did not have the cash, which is why they were selling, I paid that 5%. So I ended up paying this 5% to the developer and obtained the NOC on behalf of the seller. And for this 5% that I was paying, we signed an undertaking letter. So we signed basically an undertaking letter stating that the seller acknowledges and accepts and agrees that the buyer is paying this 5% on behalf of the seller to obtain the NOC and getting to that 60% threshold. So that was step number 7, very, very important undertaking letter that we had to sign. Then step number 8 was basically signing or setting the transfer date. So once the NOC is obtained, then we have 1 month to transfer the property from the seller to the buyer. So once the NOC is obtained, then the developer gives us 1 month and we set the transfer date. Since we both were traveling, I came back to Dubai on June 3rd, and the seller also, I think, came on the same day. And then we set a transfer date for June 4th, I believe, and that's when we met at the trustee office, which I'll go over in just a minute. But prior to that, I had to, of course, arrange for all the checks and the cash. So I had to go to the bank, arrange for manager's checks and for cash as well. And this is all related to the closing cost. So I had to pay the government, DLD, Dubai Land Department. I had to pay the trustee office. I had to pay the agency, the mortgage commission. I had to pay the cash to the seller for the actual property. So all of this I had to arrange 1 day prior to the closing, and I did that, of course, on June 3rd, I believe, and then visiting the trustee office on transfer day. So June 4th, both the seller and the buyer, the agent and my lawyer, all of us went to the trustee office, registrar office. These are registrar offices assigned by the government, DLD offices, where you go and you transfer the property. And then step 11 is completing the transfer, of course, at the trustee office, handing over all the cash and the checks in front of the government official. So there are witnesses there. Everything is very, very smooth. And it takes about an hour to complete the process. So once the 1 hour process is complete, once you get the approval, then the new ukud, basically it's called ukud since it's an off-plan property, it's called an ukud here in Dubai. It's just like a pre-title deed generated, right? It's generated by the Dubai Land Department. So from the government website, it's new ukud is generated with my name as the buyer and the seller's name over there as a seller. And then once this document is generated in step 12, then I am the official owner of that property. And only then the transfer of cash, the transfer of checks takes place. So for that 1 hour, we're just waiting. We went, grabbed coffee, and while that approval process was taking place, the cash, the checks, everything is kept aside at the government office. And then once that approval is done, then I receive the new code in my email. And the title is again transferred over. This is the pre-title because it's an off-plan property. And then the cash and the checks are disposed to the seller, to the agency, and to the trustee office, and to the DLD as well. So that happened. And of course, after that, I went to the developer's office since I was the official owner. I went to the developer's office to sign a new SPA. That's a sale and purchase agreement with the developer. So signed that as well. And now I am basically waiting for these steps here. So that's step 14, 15, 16, and 17. 14 is just collecting the executed SPA from the developer. So just waiting for that because I just signed the SPA yesterday. And the developer takes about 5 to 7 working days to execute the SPA. And also issue a new SOA, which is a statement of accounts, which basically shows me what's the balance payments left for this property and how much is left basically for me to be fully owned in that property here. So there's about, I think there's going to be about 30% left of the 871,000, which was the original price that the seller paid for. So original bought it for 871, seller bought it for 871 originally, and then I've bought it for 895. So very, very small profit for the seller, but of course she also paid the government fees and everything else. So on a dirham basis, she didn't really generate any profit. She generated a loss. But it was a quite interesting deal because there was foreign exchange involved because since she was from Russia, she bought this property, converted Russian rubles into AED, which is dirhams, and now Russian rubles have depreciated against the dirhams, right? So dirhams have appreciated. So since this money was parked in dirhams, now when she is going to convert back into Russian rubles, she's actually going to make a nice profit because of that foreign exchange hedge that she was able to do by placing this money into a property in dirhams. So again, it was a very, very interesting deal. Again, after the executed SPA is collected, then I basically just have to secure those 2 documents that are very important: the code, the title, the sales and purchase agreement, verify all the details, and then continue with the payment plan with the developer, and then wait for handover and the keys, which will most likely happen in March of 25. So that was all the steps here that I could think about. Yes, there's a lot of steps, there's a lot of due diligence and a lot of analysis and a lot of paperwork and documentation involved, but it was totally worth it because it was, a very, very nice learning experience. I got to learn a lot about the whole transfer process, about, buying off-land property here in Dubai with very interesting dynamics. So hope you all enjoyed this video and a complete update. Let me know your thoughts down in the comment section below. In our next videos, I will maybe kind of show you guys what the interior looks like in terms of the show apartments, what the outside looks like, and everything else from that as well. So again, hope you all enjoyed it, found it helpful. Make sure that you drop a like and subscribe to the channel. Happy investing. I'll see you all in the next video. Take care.